everybody. How are we all doing? Happy Friday. It's Friday. We like Fridays. Morning, Church. Egosa. Morning, Virginia. Champagne, Eri, Neo. How are we all doing? So it's Friday. Finally. Got through this week of FOMC madness. Though I didn't really do a lot apart from go mental up and down, did it? We'll look at that in a minute. Today, so far, we've had the Bank of Japan confirming rates, which we knew was on the cards. Just no change on that. A bit of weakness came in with the news this morning, but we've had Ueda speaking this morning. Oh, it's still going, actually. I think, yeah, 7:40. So Ueda's talking at the moment, basically, but no change on the Bank of Japan rate. And retail for the pound came out massively positive. Other than that, overnight, not really an awful lot. There's all the Bank of Japan stuff. But yeah, so nothing much else really overnight to talk about. So that was 1%, the retail sales for the pound. Forecast was to drop. We actually got a pop. So we were at 0.7. We were forecasting it to drop by 0.4. We actually got a 0.3 increase, which is great. So a bit of a rally on the pound. Nothing dramatic, as you can see. It's not big. ADR hasn't been hit across any pound pairs. So the market is reacting positively as it should do, but not really anything exciting going on with that. The yen weakened a little bit. Actually, it's only kind of coming in the last half an hour or so when Ueda's been speaking. But yeah, nothing much really going on overnight. So a bit dull. So there's no ADRs to look at this morning. The pound US dollar and euro US dollar, if we just whiz back to yesterday. Obviously, we had the whipsaw on FOMC. Yesterday, we had a drop, a pop, and a retracement. If you look at the euro US dollar, much more pronounced. But basically, we did end bullish yesterday. So that's where we opened. We had the big drop down. We had a massive pop to the upside. We had another ADR drop to the downside. So 400 ADR across the euro US dollar yesterday. Then it pushed up another ADR at the end. So 500 ADR in movement. Up and down throughout the day, but the market ended very positive. So it does look like we are getting that weakness in the US dollar off the back of that interest rate drop, but it's not as dramatic as I thought it would be. So we ended 44 pips down on US dollar CAD, for example. ADR is 61. So it didn't even close down an ADR yesterday. So yeah, we probably a little bit more sustained weakness coming through in that US and potentially in the CAD as well. But yeah, big busy day yesterday. So difficult to see. We need to give it a couple of days really just to see if they continue to sell off the US. In which case then kind of you should be bearish US, but it's neutral to bearish. It's not really that bad. I don't think that 0.5% drop. I think the market was really expecting it. So the rest of the day today, we've got 1:15. We've got Macklem speaking, which is ahead of retail. So core retail is forecast to be a slight drop, and overall retail a big increase. So could be some movement on the Canadian dollar. This afternoon, we've also got Lagarde speaking and Harker right towards the end of the day. But apart from that, it's retail today. That's pretty much it for the CAD. We've had the pound. So as you can see, obviously, we had quite a bit of movement yesterday. So these weekly ranges, we hit all the yen ones earlier on in the week. Yesterday, we've obviously had the pound US dollar hit, New Zealand CAD. What else did we get hit yesterday? Aussie US, and Aussie CAD was already hit and extended, I think, isn't it? Yeah, so that went further, the Aussie CAD. Yeah, so the reverse alert went in yesterday. Funny enough, it went in at the monthly high, where I said it was going to bounce because it's limit orders sitting at the highs. So if you did get in on that one yesterday, well done. If you got in on it the day before, I said that's probably where we were going to find resistance. Whether we continue to find resistance, we'll have to wait and see. But you've had the reversal alert, so we're on the retest. So looking good for shorts. Aussie CAD, very good for shorts. I'm already in Euro CAD and Pound CAD, so I can't take it. Stuck fast on that Euro CAD, and obviously Pound CAD is running away today because of the pound news. I've taken another entry on that this morning, so I'll be getting in on that shortly, somewhere around about there. Average will come up, so I'm looking for a push down into propulsion. So I'll adjust my targets down up into propulsion when we get there. So those are your weeklies. There's a few weeklies to look at. Obviously, all the yen pairs we reversed yesterday on most of them. Just basically whether or not we continue or not, we'll have to wait and see. But so yeah, So there we go. That's your news. Hope we got good data from the CAD retail sales. I'm sure Aussie CAD with actual 10% drawdown. Why are you in 10% drawdown? You shouldn't be in 10% drawdown on anything. If you're in 10% drawdown, it's time to stop. Cut it. How are you in 10% drawdown? It's only gone up for 6 days. That's 4 ADR that's moved against you. If you got in at, you didn't, but if you did get in at the lowest possible point last week, that's moved 4 ADR. If you're risking 1% over 1 ADR of movement, yeah, that first position would be in 4% of drawdown. But you wouldn't have got in there because that's the very, very lowest point. So you would have been in potentially somewhere around there. Shouldn't be in 10% of drawdown. But anyway, if you are, get an aggressive drawdown control position on today. Stop above that high right now. Look at the wicks. Yeah, so you've had the reversal alert. Rejection at monthly high. Look at these wicks today. We've pushed up, paused, pushed up, tweeter topped, rejected, pushed down, pushed up, rejecting. Bang. Get in right now. 75% of your in total lot size, but stop above there. Your average will be up in ADR and you'll be out of that this afternoon. So yeah, good. It's really good looking short. It's really annoying I'm in these other pairs. Because that is a really good looking short, that Aussie CAD. Lovely, lovely push. Maybe a little bit over leveraged. I suspect so. Afternoon, Paul. Morning, even. Mumo. JC. How are we doing? I don't know what time of day it is. 7:56. So market's open in 4 minutes. The DAX is dropping this morning. So we've got a tiny gap fill from yesterday. But we've got also a gap fill from previous day. That one kind of did it, didn't it? So there's a tiny gap fill to the upside today. So we may well just come up and quickly pop that gap. But we'll wait and see what happens at the open. Euro pound close to new lows. Yeah, it should do. Should get through those lows today. Again, long on that one at the moment. News has just all gone against me on the pound this week, unfortunately. Let's go to the 4 hour. So yeah, so there's your lows down there. There's nothing much really but clear air to the left. So if you scroll right out on the daily chart, this is the 2-month low. We've got this massive propulsion gap basically, which we broke and then retested. That's what's been holding at the moment. So they've been rebuying this. The pound obviously is not changing interest rates, which makes it bullish at the end of the day, sort of neutral to bullish. The euro, we've just had a 0.6 drop on a forecast of 0.5, which makes it bearish. So, yeah, there's a good chance it will break down. But we'll wait and see. It may hold today. This exactly where we are right now is exactly where, if you want to buy it, this is where you want to buy it. So I'm getting my third position on. If this breaks today, I'll be taking my third. Average will come down. Just waiting for an ADR push, basically. So, yeah, could well drop down today. But it's a good-looking buy there. So if you want to take a long on this today, drop down M5. You've just had a reverse alert, actually. It's already given a reverse alert. A big bull move there, look. So if this low holds here, that is your reversal. Those retail figures on the pound, I'm not sure how strong the pound is going to be off the back of those. Retail is a lot less important at the moment than everything else, basically. So retail is kind of a gauge of how the economy is going. It affects GDP a lot more than it affects everything else, like inflation and interest rates. And that's really what the market seems to be focused on at the moment. So we haven't had any ADRs, as I say, today. Market's just about to open. Here we are. We're off. Let's see if we get any volume today. It's been a dire week. I'm £700 down this week overall on the week, which isn't a lot. It's 2 clean breaks and it's back, so it's not a massive loss week. It's just been a really sketchy week. We had some good breaks, but we've had a lot of whipsaw this week. Awful lot of whipsaw. As you can see, I mean, the FTSE kind of paints the picture of the week, doesn't it? We had that day on Monday where the market just went. Was it Monday? Yeah, it was Monday, wasn't it? Unbelievable that was. I've never seen anything like it. It stayed within the opening range for pretty much the entire day until New York opened. And then it went, oh. And then it finally had a rally for the last 3 hours of the day. But that was the weirdest day I've ever seen on the DAX. Very, very, very odd. So breaking down on the DAX. Got a funny feeling with this this gap fill is going to go today. I don't know why. We'll see. Morning, Johnny. Jasper, morning. Any outlook on Euro Pound? I've just covered that. Yeah, it's an early trade. It's only got 2 positions on it, so it's quite normal. 3-4 positions, 3-4 trades rather in a position. So hopefully we get a bounce off the lows today. I'd kind of really like this to do today is to drop and break that low, have a false breakout and come back up, because that means I can get a third entry on, which will bring my average down nicely. That'll give me a nice exit Monday, Tuesday next week. But it's not really, it's not there yet. Not quite. Yeah, DAX just popped out the lows. Long on the FTSE, just popped out the lows. Not a lot of volume today. Hopefully it's not going to be another whippy day. Might be. We'll see. If it is today, I think what I will do is I will get out on the gap fill and assume that this final selling that we had is going to act as resistance today. Just had an alert come in. Swiss yen ADR. We'll go through, have a quick look at all the pairs in a minute. But Swiss yen ADR. That is yen weakness this morning. We're just about to hit ADR on euro yen as well, and that is topping out at that 3-week low, which is yesterday's high. But Swiss yen scalping opportunity there. Be better to see if it tests that high. That's really good resistance as well. Like, you got a weekly high there as well, and that will be again that 3-week low. So you got 3-week low, which we came and accumulated and sat around. Finally broke it, came back, retested it, put in last week's high there. So that's a really good support resistance area. So if we test that area, if we get a 125 on that today, or just test yesterday's high, wait for a reversal on a low time frame. Also extended on the weekly as well, but it's extended to the, oh no, it's extended to the upside, yeah. So, well, it's kind of already done a 38 retracement on that leg, so could come up to the highs. Wait and see. DAX, it's not really going anywhere at the moment. Good target to the downside. Oh, that's a big flush. Big order just came in there. Really not going anywhere, is it? Fast, is it, today? We'll come back to that in a minute. I don't know why I've just got this feeling it's going to gap fill today. So the close yesterday, the actual close was 18,972, which is yeah, I mean, it's basically it's there. So I just got a feeling today, just because of that big sell-off yesterday, this is just slipped down, that they're going to come back up and retest this area. I don't know why, it just is. We'll see what happens. Right. So obviously ADRs today, you've just got the Swiss yen. Weeklies we've covered. Monthly hits, it's the same as we've had pretty much on everything else all month. It's been the yens. So all these monthly hits we've got at the moment are the yen pairs. Swiss yen, CAD yen, Euro yen, Pound yen, New Zealand yen, and US yen. Yeah, so we had the big rally on the yen. Aussie dollar CAD is the first monthly hit that isn't yen based, and as we know, that is up at a very, very nice level at the moment. We're up at the monthly highs, so we've got this multi-week run that we've had. So we've had a beautiful big long rally up there, so we're looking basically for the next leg down to profit take that move. So target wise, obviously you've got the main propulsion gaps there, which broke the high, and then we obviously rallied away from that. So that is roughly 50% retracement as a target to the downside. And obviously we've got the reverse alert on the hourly there, which is currently retesting, and a lovely rejection candle this morning as well. So potentially 1 minute chart, good looking short opportunity on that one right now, basically for holding for a few days. Euro pound has just hit its weekly range as well. A bit late, but Euro pound going down, so we're still getting more downward momentum on that Euro pound. So like I said, hopefully today we'll get either a reaction at that low, or ideally for me personally, break that low so I can get another position on. I will watch this. If this does react at the monthly level and come straight off of it, I will probably just hit the button myself, because the next long is there, which is, you know, not a lot in it. In fact, that is actually going to be quite close. What's the ADR on this? 30 at the moment. Yeah, that's a bit too tight. 10 pips. Ideally, you'd like it to break down, but not hold, just break down, hit ADR, and then pop back up again. That'd be nice. So yeah, so those are your ADRs basically, and your weeklies, and the monthly. Basically, Aussie CAD is the only one that isn't yen related at the moment. RSIs, we had quite a few RSI extensions yesterday on the 4-hour and the hourly. They've all kind of petered out a little bit. Yesterday's price action, especially with the US dollar, was all over the place. So we had loads of ADRs yesterday. We had like 200 ADR moves on multiple things. That US dollar CAD trade that I took yesterday was an ADR reversal at 200 ADR down here. Yeah, so just completely sold off. So took the reversal alert straight out. Easy, nice, quick scalp trade yesterday. But as you can see, huge ADR moves yesterday. So anything RSI based that did get extended will have got unraveled basically within the same day. It's not often you get this. If days like this, I always get somebody message me saying the ADR indicator is broken because the ADR 100 line is below the other ADR 100 line. And I always have to explain, if something's moved 200% of its average daily range, the ADR line is going to move 200%, which means 100% plus 100% is 200%. They will cross over. It's not often we get them, but when people see that chart, they go, is it broken? I'm really confused. If you're confused, it's telling you shouldn't be trading it, basically. It's a good thing. If you can't work out what the hell the indicator's telling you, it means you shouldn't be in. So it's not by design, it's just the way it works, isn't it? It measures from the highs to the lows and drags it along. It's dynamic. But yeah, very rarely you get those sorts of days where you get multiple 200 ADRs, and obviously yesterday was one of them. ADR up, 200 ADR down, ADR up, ADR down. Massive move, that US dollar CAD. And the Euro US and Pound US. So RSIs obviously will have been reset if they were extended, because you would have had a lot of movement. So the only thing we've got today is the pound CAD, which is still rallying. So that's extended on the hourly. The 4-hourly entry that we had this week hasn't worked. I took one off this week and made some profit on it, just in case we came and retested the monthly and bounced, which we did. So I added that back on again. And obviously the news today is making it rally. So it looks like we're going to get an ADR hit today on the pound. So good opportunity for shorts if you're not in already. Pound, obviously, with what we've got happening with interest rates at the moment, is likely to remain strong. Won't be that strong because we are going to drop the rates. It's just that they're stalling all the time, doing my head in basically with the changing of minds. All of the central banks, Bailey said, if we hit 2% inflation, we'll drop the interest rates. We got there. Everyone was like, right, let's price in the interest rate drop. And then he turned around and went, it's not quite where we want it to be. You said 2%. We hit 2%. Now you change your mind. So we've got the same thing happening again at the moment. So it looks like November. We're even going to skip October potentially for an interest rate drop. So continued strength in the pound. However, obviously it should get there like that. In which case, obviously, it doesn't matter really which way you trade it, but probably going to get out of your long positions if you can get ADR hits to the downside, RSIs to the downside, to get out of those quicker than you will out of the shorts. But obviously, you may miss opportunities along the way. So yeah, third entry will be going on that one today. The only other RSIs we've got are the pound Swiss, which obviously is the pound rallying again. And we've got some Swiss franc weakness coming in with the yen as well. So there's potential for an entry there. That's just broken out this week. We are very nicely extended though on the 4-hour look. We're above that 80 level. Yeah, 79.79 on the last candle. That's now well above the 80. So yeah, good looking short. But you did have a signal on this yesterday as well at this point. And we looked at this one, didn't we, as a fairly decent resistance level, which we're kind of still in. So we're at that monthly there and there. But like I said yesterday, these monthly levels are just part of this massive drop. Yeah, so that's the previous month's low and this last month's high. They just happen to be part of the massive sell-off that we had on that week. So not really good levels technically, because it's just part of a drop. So next accumulation is here, and very nicely extended. So again, don't get too greedy. You can see I took a short there on the same trade and got out fairly quick. It will be the same thing. Don't get too greedy on it if you're going to get into it. Reversal alert today is a fair distance away down there at the moment, but obviously that will change if we put in some bear action at the highs up there. So see where we go. Hedged on the FTSE. Is this just going to run for that high or not? So yesterday on the DAX, we put in all-time highs, marginally, just about. You know, we just about got it, but it's potentially a false breakout. We've got this massive run, which looks like they need to undo a portion of it. But as you can see, at the moment, the stock market can rally like crazy. So especially with that US dollar coming down and the euro coming down, obviously with those currencies reducing in value, tends to boost the stock market. Stocks get cheaper, they buy more stocks. That's the way it works. It's to do with the fear greed element. Yeah, if stuff becomes cheaper, you buy more of it. Yeah, if the US dollar, in this case the euro, devalues, stocks are cheaper to purchase, and then you can sell your stocks at a higher price when the currency goes back up. So it is indicative of potential moving into quite a bull market at the moment. So just be careful with short positions. You're likely to find a lot more buying pressure at previous highs and lows than you would normally, because the market's going to want to try and ideally go long. So I'm just cautious today. And the other thing that I don't like today is we've got the gap fill to do to the upside. It's just not a particularly interesting point to bounce from there. I'd be more interested in a bounce down here. We will see. Right. Come back to that in a minute. So yeah, so those are your RSIs and ADRs. Not a lot of opportunities today to get in. I've got exposure, pretty decent exposure on at the moment. Got 4 positions on, which is good. So just waiting for additional entries and some pullbacks, basically. So looking at opportunities today, you're not going to find an awful lot. We've gone through quite a big movement all week this week, so there's been plenty of opportunities to get into new trades. Not been a bad week. It's 1.7%, which is all right. Not amazing, but it's money. So that's, for me at the moment, still the best play at the moment. If we've obviously got a week up, second week rally. If it does do a third week rally next week, and you're buying from this high here, there's kind of clear air really until we get up into these highs. So you're looking at sort of 4 or 5 ADRs worth of movement to the upside. It's not going to be able to sustain that without a pullback. Yeah, it's going to be very hard for the market to push much further on this. And I don't think that sustained weakness in the CAD and the US is really going to be that strong, but we'll wait and see. So good looking short opportunity there. All the yen pairs obviously are pulling back at the moment on the down leg. So all good looking short opportunities. And obviously, if you take it short, just be aware that you are going to be paying high swaps. So I'm really not interested in shorting this. I'd rather wait and try and get some longs on like this one here, because it makes me money going long on it. So I'm just looking at the DAX. just don't want to get hedged on the DAX today because the upside on the DAX is tiny. Might give it the propulsion gap. Really whippy open again, look, today. Weeks like this, you think, why am I not trading the 15-minute opening range instead of the 5? And then you switch over to the 15 and realize you miss most of the action a lot of the time on the 15, and then you switch back to the 5 and you realize sometimes you get whipped. There is just no right or wrong. But very whippy week this week. But then again, you know, the weeks where we have clean breaks 4 out of 5 days, we don't complain about those, do we? Just want to keep an eye on this because it does break down. That downside target at 3R, just going to move that up ever so slightly. In fact, I'm going to get out of both down there today because I really, you can see the upward pressure here. Just feels to me like we are, especially with the euro dropping and everything at the moment, like we're going to do a run. So just cautious about being short. So yeah, so all the Aussie pairs basically, they are all nice pullbacks and potentially good areas for shorts if you wanted to short those. None of them really extended at the moment, but you've had plenty of extensions this week for opportunities to get short. But I really don't know what's happening with this yen. The market doesn't seem to like it this morning either. So what Oada has been saying this morning doesn't seem to have given the market an awful lot of confidence. Still talking at the moment. Weak yen caused import price inflation, blah, 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 blah. Real interest rates remain at very low levels. Yeah, we will keep adjusting the degree of easing if our economic and price outlook is to be realized. Cryptic. But yeah, so hard to tell which way that's going at the moment. Still not really on my radar. It needs to be a really good setup like this one yesterday to really grab my interest at the moment. But as I say, really want to be long in it. Morning AZ, morning George. Excuse me. So yeah, not a lot of opportunities today. So there's not really an awful lot to cover at the moment. I'm just going to whiz through all the pairs and just see if there's anything of interest. That Aussie dollar Swiss that I got into yesterday is not really gone anywhere yet. Reversal is in. So could be a flag break long. If we break those highs, obviously we'll be adding into the position. But liking the look of that one. Apart from that, upside resistance being hit on the Aussie New Zealand as well. Not really a great level that, but it is getting stuck at the moment. Once we get a reversal alert on that, could well be coming down to retest those lows. Might be a nice looking little short, but obviously just taking a trade out of a 4-day range really. Aussie US, again, all the US pairs at the moment just want to sort of sit on the sidelines. And just see what the market makes of this expanded volume yesterday. So we had massive expanded volume come in on FOMC yesterday, huge expanded volume. So just want to see where the market wants to take the US, give us some clues as to really if they're going to remain bullish or bearish on it. But at the minute, you can't really tell. So looks complete indecision at the moment. Yeah, so you got hammer and a shooting star back to back. Just absolutely no clues whatsoever at the minute. Reverse alert short on the CAD Swiss. Again, this is holding these lows very nicely at the moment, so potentially pushing back up into there, but you're going to need strong CAD and weak Swiss franc. We've got a weak Swiss franc at the moment with the yen. Nothing exciting, really. Euro pound. Just taking another one on. Starting to reject, so limit orders are triggering at that low. I'm not going to be able to get a second position on if it breaks. If it doesn't break, with the strength of this pound at the minute, it's probably going to retrace a little bit before it rallies again. So I just want to get the average nice and close, so it's well within an ADR. So propulsion target to the upside would be my new target on that one. So just taking a manual entry on that. And I'll get out there. Euro New Zealand held the propulsion gap yesterday. So we bought that 4 times. And yesterday again. Obviously, you've missed that one. Lovely rejection this morning. That's a beautiful retest. Back up, test these highs. If it obviously fails, you'd be scaling in all the way down to there, 225 ADR. So next entry is going in on this one shortly. As soon as we get a reversal. Reversal alert at the moment is all the way down there, but I'll be getting in up here somewhere. When we get some weakness. New low of the day just gone in on the DAX. I say new low of the day. Double bottom, really. Trying to get a new low of the day. Very, very, very weak volume today. It's kind of like you're getting big orders coming in and it just stops dead. So nice flush. I'm going to take that off just because I've got the hedge on. If I didn't have the hedge on the FTSE, I'd probably leave that running. But that's 320 banked, 275 hedged. So it just means a profitable morning. But I'm just very wary about shorting this at the minute. So there you go. Banked the DAX. Might be the wrong choice. But we will see. I've just realized we've got a small gap fill as well on the DAX from the previous day. Very tiny though. There we go. Anyway, that's banked. So the rest of the pairs, pound New Zealand's coming up to an interesting level. Up at these highs. So very nice resistance coming up here. So we might find some, obviously it's not exhausted, not extended. So you are just playing a range bounce. If the range obviously breaks, it'll be a scale in. But good resistance coming up there. It's the entire week, basically. We haven't gone anywhere all week. So Friday, are they going to make a move on a Friday? Don't know. If they do, you'll be pushing up sort of 200 ADR for next resistance. But yeah, looks like a potentially good short play. Again, something you want to hold kind of a couple of days, get out of, back down into this propulsion move. So that's a potential short opportunity. It's not ADR. It's just literally a resistance bounce. New Zealand dollar CAD. We've rejected the highs twice now up at the monthly level. That propulsion gap looks like it's being resold again today. So again, reversal alert today. Another opportunity to get in on that one. So your reversal will be there. So you got a lower high gone in yesterday. So that's previous day's high, yesterday's high, current high of the day. If that gives a reversal alert, you're contracting, and that could be the break short. Same with New Zealand, US. High is holding, but again, US, just want to see where the US goes at the moment. Don't really want to take anything on that. So nothing really else looking through that is of any interest. So potential, again, US dollar Swiss, potential rebuy there going on. But again, it's rejecting this morning. So DAX is breaking down a little bit more. Should have held that. So the area I was looking at on the DAX is here. So that would have been TP for me, 18,820 roughly, which is pretty much 3R. So could have got another R out of it, maybe. We'll see. So watch that area for a potential bounce today. But we haven't got any news really that's going to drive the euro today. So it's all about the CAD. Got Lagarde speaking later, but unlikely she's going to say anything. So there we go. So that's all the FX stuff. I mean, there's nothing really opportunity-wise to get into that hasn't already signaled this week. Aussie CAD, as I say, still seems like the best play at the moment, but it's not really doing much as yet. So it's a sort of short that we'll have to wait and see if it plays out. Judge, could you advise for speeding up displaying my charts in MT5? You can't because it's crap. Get MT4. If you want fast charts, MT4. Slow charts, MT5. Bought the market reversal indicator and the propulsion indicator and the position trader EA. It takes 30 seconds to see one chart. Faster PC. Basically. Pound yen ADR. Yeah, I mean, MT5 is just not good. MT5, the GUI, the graphical user interface on MT5, is designed for stocks. It's a hell of a lot more resource intense than MT4, which is why everybody uses MT4. I've said it many times. You know, MT5 is not the replacement for MT4. MT5 was a sister product for MT4 so that they could allow brokers to trade stocks, because you can't trade stocks through the MT4 interface. MT5 allowed volume profile and all these other new things you needed for stocks. No one used it because it's crap compared to things like multi-charts, Rhythmic, Ninja Trader. It's just not as good. So nobody in futures adopted it. Therefore, MT5 just became another thing you could have for brokers, for CFDs. But everybody uses MT4. Basically, MT4 had thousands of indicators custom made, ready to go. MT5 came out with nothing. So everyone went, oh, look at that. That looks posh. Oh, none of my indicators work, so I'll stick on MT4. That was it. It's just slower, resource hungry, not as good. Glitchy, they update it regularly. They push bugs out into it constantly. It's just not as good. But that's my opinion, just from using it. And for coding for it, you know, I have, when I'm building products and testing products, MT4, I don't think, hand on heart, I've ever had a problem with anything on MT4. It just all works. MT5, it just doesn't work. It does work, but it also doesn't work. There's something in MT5 where there's just a lot of bugs floating around that just seem to cock it up all the time. But I don't know. It's annoying. I have a question about that. I'm using MT5 myself. If it is not faster than MT4, but that's what I started with, and all your indicators bought the MT5 version. Yeah, that's fine. I mean, there's nothing. it's not that bad. It's just not as good or quick as MT4. And for me, I'm older, have been trading on MT4 for well over a decade. This is just what I use. MT5 works. It's just not as good as MT4. Personal preference. There's a lot of stuff you can do on MT5 you can't do on MT4. So I have both, yeah. But I just don't use MT5. I will use it if I'm forced to use it. But the brokers adopted it to give, just because there was no reason not to really adopt MT5. It allowed the brokers to open up more stock and futures, basically, related products to their customers. But if you want to trade futures, you don't usually do it through CFD versions of futures. You do it through the CME. You'll trade futures. So it's just this. It's just I don't know. It's just never caught on. It has though, but a lot of some brokers have there's this rumor going around all the time. Oh, MT4 is being discontinued. It's not. I can tell you for a fact, 80% of the sales that Meta quotes or MetaTrader make, MQL5 make, is on MT4. Yeah, I have products for both platforms. 80% of the sales I have are MT4. So that tells me that MT4 is used 80% by 80% of people. So there's no way MetaQuotes is going to drop MT4 because they get 80% of their revenue from it. And would you take the chance as a business of going, tell you what, hopefully everyone will move over to MT5. Let's stop using MT4. You can't pay the mortgage on a hope. If those people go, oh, well, if I'm not using MT4 anymore, what other software's out there? You're going to send them off to find all sorts of other software. It's just not going to happen. So they're stuck really with these two products, which are identical virtually. And people have this quandary about which to choose. I will always tell everybody to use MT4 just for speed. The fact that I can whiz through my charts like this, yeah, you can't do this on MT5. To go through every single FX pair takes me less than 30 seconds. Can't do that on MT5. It's just for ease of use. I've been meaning to get hold of a standalone MT4 application, but I can only download the ones that brokers have their stuff on. Yeah, you don't need it. You want to get it from your broker. Just makes it easier. Why do you want a standalone one? Get it from your broker. It's better to get it from your broker. There's no reason not to. When you download it from your broker, it comes with all the broker servers already installed on it and everything. MT4 vanilla, you've got to then find all the servers for your brokers and stuff. It's a pain in the ass. Just get it from your broker. Doesn't matter. I've got, I don't know, 1, 2, 3, 4, 5, 7 MT4s sitting on my desktop from different brokers. They're exactly the same. The only difference is the icon is different. And when you go to add a new account, the server list is for that broker. That's the only difference. Morning, Harold. So, yeah. But yeah, use whichever you want. There's no right or wrong, really. It's just personal preference. And if you're using it just for trading with EAs, it doesn't really matter. But from an analysis perspective, you'll just find it a lot quicker to do it in MT4. This indicator specifically, the propulsion gap indicator, is very slow to load in MT5 because of the way that the indicator works. It's basically going, look back on this candle and then do a calculation, then look back on this candle and do a calculation. And it has to work that way because it has to identify the propulsion gaps one at a time and then identify if they've been invalidated one at a time. So it has to, and this is where in the indicator, if you put the setting, here. Mine's at 1500. If you change it to 500, it'll work quicker because it's only doing the last 500 candles. Yeah. So in MT5, if you're having speed issues, drop that number, the bars back to show gaps, down to 500 or something or less. You see how long that took to load compared to the 500? I mean, it was almost instant, but it took a little bit longer. In MT5, it's to do with the graphical user interface. Because it's rendering the graphics totally differently, it has to do way more calculations and computations to draw stuff. Because it's much more advanced for drawing. So it looks prettier. This is the thing. Everyone wants it to look pretty. If you want it to look pretty, go and use TradingView. It's pretty. But, you know, we don't want pretty. I don't want pretty. I want practical, fast. I want to be able to do my job quickly. I don't want it to look good. I'm not interested in how it looks. It's a candlestick. It looks the same everywhere. At MT5, I can make my candlesticks a little bit prettier, maybe. It's not going to help me make more money, is it? Practicality over prettiness. Morning, everybody else. I haven't said hello to. Curious whether MetaQuotes takes a commission on products. Yes, 20%. That's what I'm saying. Yeah. MetaQuotes make 20% commission on every sale that goes through the platform for indicators and EAs and signals. Yeah. 80% of them are on MT4. They're not going to shut 80% of their profit and business down because they want to just move over to one platform. Not going to happen. If it does happen, it's just commercial suicide. It's up to them if they want to commit commercial suicide. But if I was running their business, I wouldn't shut 80% of my profit line down because I've got two versions of the product and I want everyone to use one. It's not going to happen. They make too much money from it, you know, and also the licensing. Yeah, I got two products. As a broker, I have to pay a license to have MetaTrader 4 and MetaTrader 5. If I only have one product, I only sell half as many licenses. The broker fees they get will be lower. Yeah, there's many reasons why it's not going anywhere, MT4, and why it hasn't gone anywhere for nearly 2 decades. Because it's a bloody good bit of software. It's fast, it's quick, it's easy to use, and it's got millions of indicators for it. But, you know, people are transitioning over to things like TradingView and stuff like that, you know, and there's plenty of other software out there. But this has been the staple of CFD trading for nearly 2 decades. And there's no reason for it not to continue to be that way. It's limited in some of the stuff that it does, admittedly, but if you need that stuff, go somewhere else and get some, you know, get another bit of software to do that bit. Strategy Tester, for example, in MT5 is way more complex. Not that much better. It gives you a lot more more information on the back test, but it is just back testing. Doesn't help with that bit, does it? Analysis is the important bit. Morning, Guna. Danny, I'm starting up the MRA EA again once I'm out of trades. I think it was messing up because I set it up with open trades or because I was logged into MT4 on my phone. Nothing to do with your phone. EAs don't look at your phone. I don't know what you did, but EAs should be set up and left to go. A position trader EA, you can do what you like with, but the market reverse alerts EA and most EAs, they work on magic numbers and they work on variables. If you reset them, they reset and they restart and they go, okay, I need to do all of this stuff that I've been monitoring and I've been hanging on to. I need to do it all again. So you just get into problems. But that's one of the problems with automated trading, unfortunately. It is a dumb instrument and it does what it's told. But it's too complicated. This is why I made the position trader EA. The market reverse alerts EA is incredibly complex. Incredibly complex. There's a hell of a lot going on under the hood. More than needs to be, which is why I wanted to simplify it down and get rid of it. Not get rid of it, but just reduce the complexity of it. We're still pushing down, so DAX has hit the target. So we've hit that support resistance to the downside. Obviously, that is the previous day's high there, which we didn't really do a lot with on FOMC. We did come back and retest the previous day's high, so potential long opportunity there at 3R. So see if that holds. We just put a higher high in, and we got another minute left, but it looks like we're putting a higher low in. So it does look like sellers are running out of steam down here, potentially. Or the buyers are just stepping in and overwhelming, although I wouldn't call that overwhelming in any way, shape or form. Just doesn't seem like an awful lot of volume in the market. This looks a little bit like slippy movement today because there's not many interested parties right now, but we'll see. But it does look like this might be a start of a reversal to come up and do the gap fill. That's the play I think is in play today, and possibly all-time highs, running for all-time highs again. Put the POS EA on sale again, please. No, I can't. I've just done a sale for 2 weeks. And it's a pain in the ass. It takes me ages to put a sale up because I have to go into every product and change the price, put a little bit of text up, press a button 3 times to confirm what I want to do. And I've got like 30 odd products. It's only $20 odd you save anyway. Mumo, how's RSI2 doing on the Dublin account? I wasn't using RSI2 on the Dublin account. I was using just discretionary trading. Absolutely terrible. It was doing really, really well. I was up 65%. I'm now down 43%. I've had 2 margin calls. So yeah, shocking. That isn't going to be a video now, that account. It's screwed. But yeah, I'm down 1,500 on it now. Basically, and this is the problem with high risk trading. When you're trading 5% and 10% risk and you get a big day, there's no margin. So having that account, that is a prime account with 1 to 300 leverage. So the margin call on it is roughly 55-60% of the balance. So yeah, got double margin called on it, unfortunately. Got one yesterday. And also I made a really stupid mistake with and again, this is why I trade the DAX on DarwinX and I don't trade the DAX on RoboForex. The RoboForex open times are different. So like wasn't yesterday, which day was it? Day before, it was FOMC day. So I had a short on FOMC from here. So I scaled into that FOMC move, yeah, anticipating it being undone. And I got back to, I think it was about $100 or something in profit here. And I was watching it to see if we got another sell-off for the end of the day. And we didn't. So I went to close it on my RoboForex account. The market was shut. So I was like, brilliant, I've got to hold it overnight. What did we do yesterday? Gapped up. And then what did we do? Pull back and rally. Got above that high, margin called, 2.5 grand. I had an exit to break even on it on Friday, which I was going to take, and I went to press the button and the market was shut. Wasn't shut on DarwinX, was shut on RoboForex. Shuts half an hour earlier. So that was my fault, my mistake. So I wouldn't be 2.5 grand down yesterday. I would be just trading. And I would have loved to have traded this yesterday. Would have been lovely. But yeah, so I screwed it basically. But it's not really the account's fault. It's my fault. I made a stupid mistake by not paying attention to market hours. Again. But yeah, I mean, it was on 10% risk per entry, and I had 3 entries on it. So 30% over 1 ADR. What did we do yesterday? 125% of ADR. So yeah, I got margin called. I had plenty of money in the account. The account's still got 2.5 grand in it. But if it was a 1 to 500 leverage account, I wouldn't have had a problem. But because it's a 1 to 300 leverage, and again, my mistake for not really looking into the leverage allowances. But yeah, I would have been fine. But yeah, it's a pain in the ass. I wouldn't have really survived yesterday anyway. That was too big a move. But in a way, it's good that it margin called me because it would have probably blown the account yesterday. However, be out of it now. So very nice. Yeah. So yeah, that was a screw up. Need to start it again, really. I want to start with a fresh account, basically, and do a double and show the. I mean, it'd be good actually to use that as an example because that is part of the problem. You've got to be aware of leverage. If you're using high risk to double an account, leverage plays a big part in it. If you haven't got 1 to 500 leverage, you're going to get margin called because you're going in with very big risk, and small moves against you are going to hurt unless you're using a stop loss based strategy, which obviously I'm not. I'm position trading. So anyway, we got CAD news this afternoon. Yeah, hoping for some strength, hoping some positive news. I've got pound CAD. We just had an ADR on US dollar yen. So move to the upside US dollar yen. This is downside yen rather than upside US. So really weak yen today. What's Ueda said? So Ueda's obviously upset the market. They don't like what he's been saying this morning. Obviously, interest rates remained the same. But obviously, he's upset them today, and they now don't want the yen anymore. But I'm not interested in the yen either. Thank you for sharing your experience in double account trial. It demonstrates how difficult it is. Yeah, it is difficult. This is the thing. It's not difficult if the market conditions are right. I was up 65%. Yeah, in 4 days, 5 days, 6 days, I think it was, something like that. When did I start it? I started it on the 4th of September. And the margin call was on the 13th of September. So from the 6th to the 12th, 6 days, which is probably 4 or 5 trading days, I was up 65%. If I'd have had a good week this week, I'd have doubled the account. That was the whole purpose of it, was to show that you could get yourself a trading account done very, very quickly. But it's incredibly risky. So it's not over, though, because I mean, I'm still, you know, I started with 3.5 grand. It's down to 2 grand. Yeah. I've had 2 days, which were 700 plus days. So it's only going to take 2 days to get it back to break even, which is, you know, haven't lost anything, haven't won anything, haven't lost anything. So it's a break even month. So I'm going to see, I've got a long on the DAX at the moment, which is running, which I've just put on, literally just put on, because obviously of what I just said about the bounce here and the gap fill play, which is basically the trade I'm doing. So if that hits target today, that will be $650. So that's half of the loss back. No. But that's the way it goes with high risk. It's all about strike rate. Literally, it's about taking those A+++++ setups. Yeah, that is an A+++++ setup as far as I'm concerned. Yeah, we're in a bull market, and basically we hit resistance. We came back down, and we retested it when we opened with a gap up the previous day, pushed up. It's bull. Yeah. So if the bulls are going to remain in control, as they have been for the last week, considering the euro is coming down and the US dollar is coming down, which will drive the stock market long opportunities are your A++++ setups. Take them at support and resistance with a target that's obvious and is achieved most of the time. You've got yourself a nice trade. When we get back there, if it doesn't bounce and it just flies into that propulsion and maybe hovers around I'm going to go for a new higher day today. If I get a new higher day today, I'll have all of that margin call back because that will be uh, 1,300. Won't have all of it back. But 1,300. So we're basically back to break even. So if we get a new high of day on the DAX today, I've just had 2 margin calls, which have destroyed the profit, and I'm back to where I started. It's a battle. It's a real battle, but it's doable, isn't it? You know, I've done it before. I've done it in prop. I've doubled an account, not doubled an account, but I've hit target, which is basically almost double an account, isn't it? Because you get $5,000 drawdown to play with, and they want you to return $8,000. So that is doubling, really, isn't it? So I've done that on prop live in here many times. Just got to get that right trade, and you just got to hold it. That's the thing. It's all about holding it and getting that lucky move. If you look at the DAX today, if it does break all-time highs, there's nothing to stop it, obviously. Yeah, we've got nowhere to go. So you could easily pop out the top by half an ADR. If you put half an ADR on today, so high of yesterday is ADR. So look at achieving 150 ADR today, maybe even more, you know. But what you usually find at all-time highs is exhaustion, as we got here. Yeah, you usually get exhausted at all-time highs because the market's got to really get through it. Every time you get an all-time high or a monthly high, there are limit orders sitting there. The reason it's a high is because the sellers took control of the market at that point. The sellers are short. Therefore, when you get back there, they don't want to let you through the level. And all-time highs are the hardest of all resistance to get through. So you usually find you get stopped in your tracks. If you don't, it means that the sellers have basically flipped and done a stop and reverse at the level. They drive the market fast, and you tend to get a break, a proper, real good, strong move through. And we're up there again. Yeah. So you got a gap fill resistance to the upside. If the gap fill gets run over today, we're going to attempt all-time highs again. Whether we get through or not, we'll find out. But if you do get through, hold it. It's a potential big money maker today. Testing with the MRA EA on gold today to get better exits. No big drawdowns. Can the POS EA manage the MRA EA positions? It could do, yes. If you use the same magic number, I have no idea what would happen though, because you'd have both EAs trying to do something. If you're talking about getting the market reversal alerts EA to take the first positions and then the position trader EA to take over, yes. So whatever the, obviously with market reversal alert EA, you've got a magic number long and a magic number short. With a position trader EA, you don't have that. So you'd have to set the magic number to whichever one it is in the market reversal alert EA that's being used. So if you want to know what magic number to use, if you go and find your trade and hover over it, there you go. It says, can you see that? You probably can't see it, but it says placed by expert ID 999. So on the market reverse alerts EA, it will be expert ID 1234, for example. So you just set the position trader EA to 1234, and that will start taking over the trades placed by that number. So that's all a magic number does, is it identifies a trade taken with an EA, so that EA knows it should only touch that one. We're using stops on the double account. No. I was scaling in and out, and I was closing positions in loss. I still am closing positions in loss when I don't like them. I don't use stops full stop. Yeah, I just do not see how they help in any way, shape or form. Right? If you take a short here, yeah, like that, and you place a stop there, right? We know it happens all the time. Price moves up through it again, and then it comes back down, and then it goes up again, and then it comes back down, and then it goes like that, and then it does this, right? You've stopped out twice. Why? Why do that? If it moves up through it, you have an option to press the close button. Yeah. Don't let the market close it out in loss for you. Let price move through that level, and if you don't like it, close it. Yeah. Don't put an order in the market. If you place an order in the market to lose you money, you will lose money. Yeah. You've got to have the discipline, though. If you have a trade plan on the CAD yen today, when it gets to that level, which is ADR and yesterday's high and a previous weekly level, shed load of confluence, right? And by the time they get there, your 15-minute RSI is going to be extended above the 80 level or the 70 level. Yeah. If you wait for a reversal up here and press the short button, if you place an order there and the M pattern is not this one, it is that one, you lose money, right? But if it pushes above that level and then you give it another 15 minutes and that 15 minutes does that, you don't lose any money. But if the next 15 minutes does that, you can close it. You'll lose a little bit more than you did there, but you will find 9 times out of 10, at some point in the next hour, it won't get above that level. You've got resistance, followed by resistance, followed by resistance, followed by yesterday's high resistance. It's at ADR. It's exhausted. You've got so many things going for you. But if you place the order to get out in the market with a 1% or 0.5%, whatever loss, you will lose. You can lose yourself up here. And you'll take a little bit more loss. Yeah. You will find that the amount of times you lose up there and the amount of times you lose there, that will be 100% of the time. The amount of times you lose up here will be 20, 30% of the time. Because if you just give it time to breathe for an hour or two and do that, you'll be in profit. And you won't be cross and you won't be over like revenge trading. You won't, this is what the bootcamp's all about. 90% of the problems psychologically caused to traders is not that they're a crap trader. It's the case that they place an order in the market to lose the money. What do you think is going to happen? The market goes up and down all day long. That's all it does. It goes long or it goes short. There's only 2 things it can do. If you place an order to say, if I'm 50% of the time wrong, take my money away, you're going to lose half your money. But you still have to close it out, obviously, if your trade idea is wrong. But, this is where this Swiss yen 125 ADR, this is where this end of day close, that's the weekly highs in the Swiss yen. So remember that big long drop. These levels aren't turning points. There just happens to be high of weeks and low of weeks in a move. So it's not particularly great resistance, these. But it's 125 ADR. Yen, obviously, they're not happy with. But this is where this end of day close comes in, yeah? So if you take a short here right now, this is a great example. So we won't take a short right now, but let's say, for example, this candle on the 15-minute time frame. We've got 12 minutes left. But let's say this candle on the 15-minute time frame paints like that. At 125 ADR, double weekly resistance, yeah? If you hit the short button here right now and you put a stop loss there, if this pushes to 150 ADR, you lose money, right? If you just wait until the New York Open, for example, in 5 hours time, this may have done that, and it might be back at your open. But what have you not done? Lost any money. Yeah. So now you get the choice at the New York Open to go, this trade doesn't look like it's going anywhere. I won't make a loss on it today. I won't make a profit on it today. But you are not guaranteeing a profit. Yeah. Giving trades time to work out. Go and look at any day, right, where you got a reversal. Here's a brilliant example. Look at this one. Entry, stop loss, triggered, close, profit, didn't get it,
Why? Because you placed an order to say, take my money away, Mr. Broker. Whereas if you hadn't have placed the order to take away my money, Mr. Broker, you'd have made a profit, because the market is going to go up and down all day long, because that's what it does every day. There isn't a day where it doesn't do that. That's what you've got to do with types of accounts that I'm running over here, where you're using high risk. You get in, and yes, if today, let's say you took that trade there, and then it went like that, and it closed up there, close the trade at the end of the day or the end of the session or whatever, and make that amount of loss. But that is just obvious. That's what the market does all the time, isn't it? Hunt liquidity areas. It has to go and find liquidity. And that liquidity is in the form of the people that sold it previously. And if there's more people selling at that level as there was the same time it went short last time, it will come back down again. But it will go and test that level. This is what it does. It just constantly tests the same areas over and over and over again, looking for large order fills and adds into positions. So by placing any kind of stop loss above a high, and it doesn't matter if you go, oh, I'm not going to use that, I'm going to go up there or there or there. It doesn't matter where you pick. At some point, it's going to get you. But on intraday trades, you've got to get out at some point. So, you just use your head. But, and worst case scenario, if you've got a news event coming up in 10 minutes and you're in loss here, or you're in profit here, or you break even here on this short trade or whatever, 10 minutes before the news, shut it wherever it is. Because if it goes against you, you could be in a massive trouble. But shut it. But don't put that trade there that gets stopped out before the news happens, because when the news happens and it goes your way, that just makes you even more irate that they took your money away and you were right. And the news made you a 7R. Pisses you off, doesn't it? The only thing that pisses you off is the fact that you placed that stop loss order. The market just did what the market did. The thing that annoyed you was you're an idiot. That's basically it, isn't it? Because you told the market to take my money away. It's what we do. It's what we're taught to do. But you won't find any bank or institution placing an order or any prop. You go into a professional prop firm like SMB Capital or any big prop firm. You won't find them using orders to get out the market. You'll find them using stop and reverse, but they won't get out just because they're wrong. They'll get out and get back in, or they won't have that order there and they will wait until a time and see if the trade has given them an opportunity to exit with a profit. Yeah, if you get in short here, you have an opportunity to exit with a profit at the end of the day. You took some heat. You took some drawdown. Drawdown's part of the game. It's risk. It's capital. It's just normal, isn't it? But you've got to be also careful with your amount of risk, and when you're doing a big account like this one with high risk, yes, there is an argument for using a stop loss on those, because your reward, you're looking for reward basically, and very quick return. When you're trading normally, you're not using that high risk, are you? So it's a little bit different, kind of a hybrid, if you like, I suppose. Are there any plans to incorporate AMR and AWR indicators? No. What, into the ADR indicator? No. I mean, I suppose I could put it into the ADR indicator, I suppose, but I don't know what. I mean, the point of this indicator is to show the probability levels. Yeah, so 12%, 6%, 23%. So this is the probability of extending beyond those areas. So it just gives you that higher probability of a trade panning out. I don't know what the probabilities are on the weeklies and monthlies, so I could get it to draw the levels, I guess, but the chart would probably become very messy. Swiss yen 125 of its weekly. I mean, you don't really need them drawn on the chart. That's what the dashboard's for. Aussie dollar CAD is 125 if it's weekly. But I haven't got any plans, no. I think the reason being is I don't get in on these levels that often because the thing is with the weekly levels and the monthly levels, to achieve these, price has got to have moved quite hard and fast to get to them, hasn't it? So what have you had? A signal on RSI or an ADR hit. So these are the signals that happen after the other signals. So I've never really looked at them. EJ, pre-intervention highs are less than 10 ADRs away now. That's a long way, 10 ADRs. But yeah. The level you want to watch is, I mean, it's not going to get there because we've got a weak US, but the level you really want to look at is the 150 on here. That's the level that the banks will be watching. That's the previous two intervention levels, which obviously failed last time. So when we get, if we were to get, I mean, you've got to get a strong US dollar, haven't you, to get there? I mean, I don't think it's going to get there. But I honestly, the yen is a little bit of a mystery now. They've really put a spanner in the works with the intervention. The fact that they left it so late prior to the previous two interventions, and the strength of it. Yeah, this is not something that we've ever seen before. This strength of intervention from a central bank. So the market's really not sure what to do with this. I don't think it's almost like the yen has been used as a carry trade within pension funds, hedge funds, all sorts of institutions for decades. Yeah, you buy the yen because the yen's low interest rate or negative interest rate means you're always going to make money by pressing the long button against it. And it's a small country with not a weak economy, but it's not as strong as all the other economies. Therefore, it's always had more chance of being weak. It's a bit like a stock market, which is it's always a trender. This kind of puts pay to that, doesn't it? The carry trade, if you were in it up here, you wouldn't still be in it. You've hemorrhaged. Banks and institutions and stuff, I'd imagine, lost a fair packet on that intervention. It happened quick and it didn't stop, especially the second part of it. So I'm not sure that is back on the cards now from a kind of playbook perspective for institutions. So I just don't know what they're going to do with it. And the fact that their interest rate is so tiny doesn't give you any reason to have a bias on it either, because it's just so low. You've got to have that bias on it because of this tininess of the interest rate. So I just don't know what to do with it at the minute. It's a kind of a scalpy type thing. Yeah, intraday movement, nothing wrong with it. But even this trade here, I said I'll regret. I think I might regret getting into this, and it was down at these sorts of points. So I was like, holy crap, 6 days solid. Are we starting another leg which is going to last for months? And luckily it wasn't. But this trade here has kind of said, don't want to touch it with a barge pole. Morning, Abdi. Anything new on RSI 2? No. Nothing new. But yeah, I could have a look into the ADR indicator and see if there's an easy way to put AWR in it. I'm just not sure how it would plot. You'd have to have it turn off and onable, wouldn't you, really? How about placing an order where you would think you would put a stop loss? Yep. Yeah, but it's still a 50% chance, isn't it? So this is a very common short. Yeah, when you break out highs, you buy above the previous high. It's the yesterday's high, yesterday's low strategy. Yeah, it's on the website. Very common. But the chances of it working or not working are still 50-50. So, you know, if you, and again, I've tested it with an EA. So you can test this with the market reversal alerts EA because it has yesterday's high-low strategy built in. But that's one thing I've got to do today. Look for a new server. This thing is so slow, this website. Yesterday's high-low reversal. So yeah, I mean, putting a stop above the highs and lows. So any reverse alert you get, yeah. I mean, but this is the thing. When do you get in? So every time you get in, are you saying, I won't get in and I'll wait for them to come and take out my stop loss? But then when you get in there, what are you going to do? Wait for them to come out and take your stop loss again? It's a never ending. You're always going to have a place where you think stops are going to be. And the reason the market either reverses at those areas or doesn't is because of the weight of orders at that level. And you don't know what that is. So you're always going to be, there's always another one, if you see what I mean, isn't there? But yesterday's high-low strategy I've tested, it works half the time it doesn't. Yeah. So, and this is where position trading can come in. Yeah. If you're doing intraday high-low sweeps like this, you can go short here and hope that that trade works. If it doesn't, when it gets up here, assume that the M pattern is going to be an uneven M pattern or stop run M. Yeah, and you take a second entry there and average in and you get out here. And if market structure is going to continue, bit of a messy chart, but if market structure is breaking that high and then going to come down and make a new higher low before rallying again, your entry here and your entry here gives you an average there, which gives you an exit. But it won't work on parabolic days. It will work on market structure days. And that is a lot of what I've been doing on that Dublin account is virtually that strategy. I've been taking shorts. If the short high gets broken, add a second position and average out of the position. That's what I've been doing. And it works absolutely fine unless you get a parabolic ADR day where you get in too early. Or you get a parabolic ADR day, which is a continuation of the second day. And that's what's happened with the DAX. But that was a margin call on a gap up. And if it hadn't gapped up, it wouldn't have been a problem, but it did gap up. And it's just a fact that it's just more annoying that I didn't shut the trade. I had the opportunity to shut the trade at break even. I was trying to shut the trade at break even. I was like, why is the button not working? And I looked at the market, it was closed. And I looked at the other market, and it wasn't closed. And I was like, But when do you ever look at market open times? You just don't do it, do you? You just, if it was forex, it wouldn't be a problem. It doesn't shut. I agree with what you say only because I have experience. Your approach is not for newbies, not because they shouldn't, but because they need to trade conventionally to understand the edge. Yeah, exactly. Yeah, it's the whole cycle you've got to go through. You've got to go through losing to learn. And this is what everybody wants to do. And this is why everybody system hops. They want to get the strategy that works. There isn't a strategy that works. All strategies fail. If there was a strategy that worked all the time, we'd all be multi-billionaires. We're not. No one is. There are strategies to extract money from market movement. That's it. None of them work enough to give you an edge. I have back tested. I don't know. It's 6 figures. I don't know. It's not 6 figures, 4 figures anyway. Thousands of strategies, hundreds of variations and thousands of variations of strategies with risk reward based returns. And they only work on high time frames because low time frames are too choppy. But everybody wants to make money quickly, which means they cannot trade above an hourly chart because they've got to make money fast. If you get in short here and you have to sit in it for 5 days to get paid, no one's interested. That's where the money's made. Yeah, but it's everybody wants to be down here trading this chop, and there is no strategy at this point that has a 50% plus strike rate. I haven't found one. I've tested them all. Not with a risk-reward ratio that is positive anyway. I can get a 50% risk-reward ratio at 1:1R, but that doesn't make you any money. As soon as you put it up to 1.5, it slowly drops below the 50% strike rate. I've tested virtually everything. I've tested every candlestick pattern, every Elliott wave. I've tested virtually everything under the sun, which is why I trade the way that I trade, because I don't need a strike rate. I need to be profitable. And as long as the market is going to do what the market does, which is move up and down all the time, you make money. That's it. You just have to wait. Patience. You eventually get to the point where you just realize that if you haven't got patience, this is not for you. You can't do it. You have to sit through drawdown 90% of the time. That's your job. Sitting through drawdown. It's not fun. Have you ever experimented with recovery zone strategy? I don't know what that is. No, don't know. I mean, what it's probably what I do, isn't it? Recovery zone. So I'm short on the pound CAD at the moment. Whoops. Yeah, it's just hit my recovery zone. There you go. So my next recovery zone is there. I guess, isn't it? I don't know. I went short here, and then I went short there. I took that one off. Then I went short again there. Now I've gone short here. Next place I'm going short is there. This is how I recover, I guess. What is the zone? An area on the chart where you take another trade, I presume, is it? I don't know. I don't know what it is, so I can't really comment much, but so looking for a pullback into propulsion. Basically, a hedging strategy. Oh yeah, I don't know. Hedging doesn't work. Again, I've tested every hedging strategy under the sun, algorithmically. It works for a period of time and then it doesn't. Yeah, it's like everything. When you're trying to eliminate loss, it loses. Can't eliminate loss completely. But yeah, I don't know. I tested POS EA with 2% risk over ADR, RSI 2% risk over ADR, RSI 65.35 on Euro US dollar with 0.5 and 1.5 exits over post-COVID. It made an absolute fortune. Same strategy in 2010 to 2014, it lost money. Yeah. Which is why you have to test over long periods of time. But yeah, I mean, yeah, I mean, I don't know. I've never tested RSI 65.35. I mean, you basically might as well not use the RSI. If you're using 65.35, you're basically saying if it's gone up a little bit, to short it all the time. It's not that isn't the strategy. Yeah, my strategy is based on elastic band theory. The market has to be stretched. 65.35, the market's just moving up and down. Yeah, so if you're getting in short because it's moved up a little bit and then it goes parabolic, I'm getting in here, you're getting in there, it's not going to work. The whole purpose of position trading is we are riding the bank's profit take moves. Yeah, so we're waiting for them to be in profit and then we're waiting for them to take profit. We can identify when they're in profit by strong moves in one direction, meaning that they have been scaling into a large order. We're waiting for them to exit the large order. That's where we get in. If you're getting in on our RSI 65.35, you're basically saying when the banks are accumulating a position, get me in before they make the move. If that move goes on for 2 weeks, you're dead. Not a good strategy. It will work when the banks are in accumulation here. Lovely. But they're dead. It's a different strategy. So you'd need to use a different type of, I don't know what you'd use for that. I've never tested it. It's accumulation breakout strategy. So what I would say is if the RSI 65.35 has been, if it's been constrained within 65 and 35 for a week, get ready to take a breakout. It's accumulating, isn't it? It's going to distribute that accumulation in one way or the other. Take the breakout trade. But breakout trades are so hard to make work, yeah? If you try to take a breakout of this accumulation here, yeah? The problem with it is, and this is where it all goes wrong, is to get a risk-reward ratio of 1-to-1, it has to move like for an entire week before you get a 1-to-1 risk reward. And you could use the low before the breakout, in which case then you might get a 2 or 3-to-1 out of it. 80% of breakouts fail. So you've got a 20% strike rate on a strategy where you've got to achieve a 4-hour return to make it pay. Breakout strategies, very, very hard to make profitable, which is why I'm a mean reversion trader. Yeah, and I've done videos on it. Yeah, there's 3 types of strategy out there. You've got trend, you've got breakout, and you've got mean reversion. Yeah, mean reversion exists in trends. Mean reversion exists in breakouts. Mean reversion exists in ranges. Every trading possibility there is, mean reversion gives you an opportunity to profit. If you're a trend trader, you've got to either wait for the trend to form, in which case you've missed the move. And if the trend turns into a range, you don't get any money. Or you wait for the trend to have formed and go, excellent, I'm going to buy it there. You've missed it. Now it's going to mean revert. That doesn't work. If you're a breakout trader, as I just said, risk reward ratios are very hard to get, and the vast majority of breakouts fail. Yeah. And breakouts are also never textbook. There are so many ways the market breaks out. It's just, I don't know. There's a million combinations of breakouts. But with mean reversion, if the market's moved up, what does it do all the time? If it's trending, it moves up and moves down. If it's breaking out, it moves up, moves down, retests and goes. If it's ranging, it moves up and moves down. If you're a mean reversion trader and every time it moves up, you try and wait for a short, and then if it's the wrong time, you wait for a short again, one of those is going to be right, isn't it? That's why mean reversion is so successful, and most profitable traders are mean reversion traders because 80% of the market time is spent in mean reversion. Therefore, your opportunities are galore everywhere. You're never going to be sitting there going, oh crap, I can't get a trade on. As long as the market's moving, you do get the periods where it just doesn't do anything, which, you can't do anything with. But, it's hard. It's hard being any other type. That's my experience anyway. But market spends 80% of the time in accumulation. Yeah, exactly. Yeah. So 80% of the time you're not doing anything, and 80% of the time those breakouts fail. It just doesn't work, does it? One of your sets files was 68.32 on 4-hour. Was it? Oh, but that's the original TDI settings. That's why. If you look at a TDI indicator, a TDI has a 68.32 default. My logic was, what the hell is 68.32 got to do with anything? Then again, 70.30, 80.20, they're just levels on a chart. It has nothing to do with price movement. It's just telling you what's happened. It's a condition. What happens after that is irrelevant, isn't it? So this is why there's no level that works. You know, I've tested many. I got a spreadsheet up yesterday, which I'm actually going through at the moment, for all the different levels that I tested on the position trader EA. So 4-hour RSI 80-20, 90-10, 70-30, 60-40. I also tested with a 40, a 21, and a 28. Then on the hourly, I did the same test. Tested the RSI 14, 80-20, the 21, 80-20, the 28, 80-20, and I got all the results for all of those tests over, this was only over a year, just to tell me in general what effect each of those has. And it's very clear that you get much lower drawdown taking the higher RSIs and the slower RSIs. The faster RSIs and the more extended it is, the less trades you take. But, you know, there's 100% strike rate. So it just tells you that all these readings on RSI are telling you is it's stretched. The more stretched it is, typically, the lower the drawdown you will achieve, and the higher the probability of the trade working out, and the faster it will work out. Yeah. So this is why you're better off using a slower RSI, ideally, which is why I use the 21 on the hourly, and higher levels, because if it's got there, it's more stretched. We're looking for stretch criteria, basically. So there's a number of ways you can identify a stretched market. You can use a daily chart and go onto a daily chart and say, if we've had 3 bull days in a row, it's stretched. It's stretched. Yeah. But there's 7 bull days in a row there, super stretched. 6 bull days in a row there, super stretched. What happens after a stretch? A correction. Should you use 3, 4, 7, 5? There is no number. Sometimes it goes 3, sometimes it goes 5, sometimes it goes 7. I've tested all of this. Yeah, there is no sweet spot. The sweet spot in 2028 was 5. 2024 was 5. The sweet spot in 2023 was 6. The sweet spot in 2020 was 3. Which one are you going to pick for 2025? Unless you've got a crystal ball, you don't know. I don't know. You pick one. That's it. All you can do is pick one and then deal with it. You haven't got any indicator that has the right level or the right setting. All you're doing is you're adjusting this line to curve fit what you can see on your chart in the past, which has nothing to do with the future. But, you know, when you look at a 4-hour chart, it doesn't take a rocket scientist to go, when it gets above 80, it pulls back. With 100% accuracy. So if you want to be super accurate, use the 80 on the 14 RSI on the 4-hour, or this is the 10 actually on the 4-hour, but the 14, same sort of thing. Again, 10, 14, I don't know which one's the best to use. All I want to know is the market's gone stretched. I need to have a look at it. Then, have we got any levels coming up? Got any news coming up? What's the outlook fundamentally? You make all these decisions. But, you know, what's the outlook fundamentally on the pound? Short. Didn't pay any attention to that, did it? So it still doesn't matter what your view is, what your moving average says, what anybody says. Your job is to enter a trade based on an idea that something will happen and deal with the consequences. If it doesn't work out and it goes way too far, you take a loss. Or you scale in and you wait for the move to come. And the move always comes. US dollar yen. We were chasing this thing short until the intervention for ages. Remember, I was short here. I was short here, short here, short here, short here, short here, got out there and went, screw this, I can't hold it anymore. Bang. 2 days later, 100% retracement on the move. Yeah. Short, 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 short. It's got to do that. It can't keep going up forever. There is no chart in existence that goes like that. You just need something to tell you that there's a chance of something coming and get in. But like I said before, if you just keep putting the stop losses in there, you will just keep getting losses. You can't do that. But that's what every strategy tries to teach you, doesn't it? So, you've got to pick an RSI. All this testing that I've done, the reason I'm looking at this again, where's the spreadsheet gone? Is because I'm putting together a batch of set files for the Position Trader EA, because I realized I launched the Position Trader EA as not so much a replacement for the Market Reverse Alerts EA, but an alternative. And I didn't release any set files with it because I just explained how it worked and what the differences were, but there's no set files. And the defaults basically in the Position Trader EA are pretty much what I would use. Somewhere between 1/4 to 1/2% over ADR, ever such a slight scaling, somewhere between 1/2 to 3/4 between trades, exiting roughly at 0.5 to 1% of profit, and getting in on RSI on the hourly 21, 80, 20, the nice big one, and taking 125 ADR extensions because they're a little bit more reliable than 100s. That's what I gave out as the defaults, and they're pretty good. But I didn't release any set files because I expected people just to do what they wanted to do with it. So that's the reason I'm re-looking at all of this data, and all of this is the system parameter permutation tests for every RSI variation and showing all the profitable tests. Yeah, there's 1,024 tests, 1,024 of them profitable. 1,024 tests, 962 of them profitable. Yeah, so it doesn't matter what risk you use, it doesn't matter what distance, what you target within reason, they're all profitable. Pick one. I don't know which it's going to be this year. I don't know which is going to be next year, but I can see what it was in the past, and that's all we've got to go on. You can only pick one thing from the past. So this particular test is testing RSI 14, 80, 20, which is my personal preference. But the reason it's my personal preference is not because it makes the most profit or has the least drawdown. It's because it has the highest probability of succeeding in the future. The bell curve on it is almost 100%. There's outliers, but pretty much you're fine. But you cannot account for what's happening in the future. Nobody knows that. RSI hourly, 80-20 on the 21, which is what I use, which is test 14, is that one. 868 out of 1,000 variations profitable. Yeah, so it's 85% probable that it will make profit in the future. That's why I'm using it. It may not make profit in the future. Something could happen. We could have a war and everything goes parabolic and the dollar collapses. It's not going to work. But if things stay roughly the same as they have for the last decade, the chances of the 21, 80, 20 level on the hourly time frame using position trading, you got a good chance of it being profitable. It's not going to set the world on fire. It's not going to make you a millionaire, but it's not going to lose you money. That's what we're in this job for. Yeah. So ADR risk 0.75, 0.51. Doesn't matter whether you risk 0.5%, 0.75%, or 1%. Doesn't matter if you add your positions 1/4 of an ADR, half an ADR, or 3/4 of an ADR apart. It doesn't matter if you target 1.25, 1.5, or 2% on your trades on singles or doubles or quadruples or whatever's. The probability is 85% of the time it will produce an equity curve that makes you alpha in the year. And that's it. That's all we're interested in, making money, isn't it? The drawdown is somewhere between 7 to 22%. Again, I have no idea what it's going to be. But I do know it won't be 22% because I will have closed it out by then. And those are the trades you look at on here where it would have gone like this and you would have been in 22% drawdown before the exit. I would have been out here. I would have been out 8 to 10 because I can't stand 22% on one instrument. That's what portfolio trading is all about, is using your portfolio to manage risk. Yeah. So at the moment, the pound CAD is in 1.89, but the euro pound is starting to pull back. So if the euro pound goes into profit, we use a portion of that profit to reduce the risk on that one. That's what it's all about, isn't it? So, and the EA can manage all of this for you. That's why I build the EAs, because it's bloody complicated to do yourself. But the entries are simple. Monkey could do it. I taught my son to do it. My son, when he was 12 years old, one summer holiday, I installed MetaTrader on his computer and said, here you go. When that gets above there, and when this pings at you, if it's I think it was ADR I was teaching him actually. I can't remember what it was. No, it must have been RSI, because I said if it's red or green, press the button, the relevant button. And he made money. Yeah, he's 12 years old, doesn't even know what trading is. He can make money doing this because the market goes up and down. I said, when it gets into profit, close it out. Admittedly, he was closing out with $5 and $10 profits all the time, because $5 or $10 is a lot of money to him. But the point is, he made money. And it's not about being clever, and it's not about being an expert in fundamentals or anything. It's about letting the market move up and down and not losing money along the way all the time. And the only way you can do that is by using small risk. If you use high risk, you will not have any, like my account over here. I had, well, they shut it with a margin call, but it had to be shut on a margin call because the risk was too high. That's a gambling account. You can't gamble and make money long term. It's got to be small risk. And you've got to pick the best trades as well. You've got to pick the extremes. The bigger the extreme, the higher the probability of the pullback. And here's a great example, US dollar. I mean, this is an unprecedented example. This is the biggest intervention move we've ever seen. Yeah, it's never happened before. So the RSI, yeah, of course it's not going to work in this instance. But no indicator on the planet works in this instance, is it? So, but, you know, you still got the little pullbacks. Yeah. That's what RSI is telling you. It's gone too far. That, we have no idea how big it will be. It could be a V-shaped recovery. It could be a flag. It could be a 50% retracement. It could be anything in between. But what it's telling us is, get ready, because they can't sustain it. Which level and which number is totally your choice. I don't know. But I just know from my testing what is a good one to start with, and that's what I use. But like I said, you could use 3-up candles. You could use a CCI indicator. If you want to use a MACD, you could use any indicator you like as an oscillator. It's got to oscillate, though, and show extremes of movement. So 3 bull days in a row means that they've been buying it for 3 days. What are they going to do with it? Take profit at some point. When are they going to take it? Day 7, day 6, day 5, today? No one can tell you that because nobody knows. They don't know. If it goes up, if I'm Barclays, right, and I've bought it for 3 days solid, yeah, I'm getting ready today to get out of this position because I'm looking at my manager going, want that Ferrari? You see what I've just done? Yeah. HSBC come in and they buy it like crazy today. I'm sitting there now going, 2 Ferraris, please. And then Citibank come in the next day, 3 Ferraris, please, because it's gone up for 5 days on a trot. At Barclays, I'm sitting there doing nothing. I don't know in Barclays when this is coming down. When it does, I will take the money. I have the power also because there's a desk next to me that is executing commercial orders, and I know when there's going to be executed. So I have the power to move the market as well as a central bank. We don't. We can only go on what they do on a regular basis. That's all we have as traders. There is no way of telling which of those is going to work. And that's what we all try to do. We try to go, that's the point it's going to go. No, it's not. That's the point it's going to go. No, it's not. That's the point it's going to go. No, it's not. 3% down on the account. Position traders go, that's the point it's going to go. No, let's try that one and move my price to here. No, let's try that one and move my price to here. No, let's try that one and move my price to here. Ooh, that was close. We nearly lost some money. We didn't lose any money. We just took drawdown. Drawdown is part of your game. That's it. It's what you're using your account for, to draw into, to make profit. This is your business's working capital. Use it. If you don't use it, you can't make anything. Businesses open with 100 grand in the bank. What do they first of all do? They use 80 grand of it to buy stock. Have they made any money? No. Have they lost any money? No. They're sitting on stock. We're sitting in drawdown, waiting for the people to come and buy it from us. That's all it is. Anyway, POS EA is the best $100 I've spent. Cool. That's always good to know. How would EA manage portfolio for you? It doesn't. No, you have to manage your own portfolio. It'll do the drawdown for you, is kind of what I was saying. So the EA will do drawdown control. You only need to manage drawdown control and watch this. This is why I build everything I build, to simplify my life. I've said this in here before. I used to trade manually, and I used to sit here every hour to 4 hours and just flick through the charts and go, set up there, nope, set up there, nope, set up there, nope, set up there. I mean, there's not going to be any setups because there's nothing extended at the moment, but this is what I used to do. And every 4 hours I'd have an alarm go off and I'd come here and go, RSI is extended. Okay, so well, let's do some analysis on this chart. And then I would drop down and go, okay, well, that's the high. So if it breaks down below there, and I'd place a pending order. Yeah. And if it triggered me, excellent. And that's how I used to trade. And then I thought, why am I spending all this time doing this? So I created the dashboards. So now all that happens is every 4 hours and every hour, it just went ping. And if it went ping, I'd look at a chart. If it didn't go ping, I'd just get on with what I was doing. And then I thought, why am I spending all this time reacting to these alerts? Because I know what I'm going to do when I get the alert. Why don't I just build an EA to automatically trade for me? Yeah. But my job is making money. The EA is a dumb instrument that basically monitors your P&L and executes an order or executes a close or does whatever it does. Yeah. It's stupid. I'm not. So my job is to literally now keep an eye on this. That's it. And if the EA takes too much exposure, you can manually manage that. But again, everybody does it in a different way. So Aussie dollar yen 125 ADR. See, this is, I'm talking away, alerted to an opportunity. But if you're using the EA, you don't need to be alerted to it because it's just going to take a trade when that happens automatically for you. You don't even have to think about it. It just does it. And then it will pop up here and you'll go, oh, I'm in euro yen short. Excellent. If you're overexposed on the euro or overexposed on the yen, you can go, no, I don't want to be in euro yen short. And you open up and you just shut that trade. Or rather you come in and just click the close button. Yeah, monitor it. You deal with your own exposure. On 25 ADR. That was CAD yen as well. That was a weekly range hit, I think. No, that was a 100 ADR. So CAD yen is ADR as well. Good looking, whoops, potential short there on the CAD yen. I'm never going to get that chart back in its right place. Yesterday's high. So again, yesterday's high sweep. But look at it, it's parabolic. Yeah, but it's only just over the 70. It's not super parabolic. New Zealand yen. This yen's really tanking today. They're not happy. If you reduce the number of pairs down from 28 to 14 or lower, does it adversely affect performance? That's impossible to answer. How are the pairs that you're trading going to perform? If you think about what you're saying, Wayne, if you reduce your number of traded instruments down from 28 to 14, if all the loss this year is in the 12 that you've got rid of, or no, 14 that you've got rid of, it's going to make it good. If all the profit is in the 14 you've got rid of and all the drawdown is in the 14 you've kept, it's not going to be good. It's absolutely no way to answer that. What is going to be profitable? What is going to squeeze? What is going to give the biggest drawdown in the next 6 months? No one on the planet knows. Because it's just impossible to tell, isn't it? You trade what you want to trade, and that decision is yours. I have elected at the moment not to trade the yen. Doesn't mean it's the right thing to do. Yeah. If you were using 70-30 RSI on the hourly on Wednesday, well done. I wasn't. But if it had done that, and then we're up here today, you shouldn't have taken that. But who knows? You shouldn't have taken it, because until it's played out, you don't know if you should take it. And this is my whole point. Everybody's trying to teach you a strategy, which is trying to predict the future of price movement. There is nothing that can predict the future. Not that we know of. If there is, they're doing a bloody good job in the temporal department, keeping it under wraps, aren't they? Yeah. Get in and deal with it after. Get in short. I like the look of that because it's 100 ADR. It's at a high. We've got a couple of weekly levels. I like the look of that short. It's either going to do that or it's going to do that. If it does that, take the money. If it does that, deal with it. Whether you should trade that, I don't know. No one knows. But if you cut down your pairs, you cut down the opportunity to take trades. But you don't know whether they're profitable or not. Yeah. So the best, and this is the advice I give in the bootcamp, the best thing to do is not to pick pairs, is to pick exposure. Yeah. I am exposed long and short on the euro. I'm not taking any more euro. I'm exposed long on the CAD twice. I'm not taking any more CAD. I'm exposed on the pound twice. I'm not taking any more pound. I will trade the US dollar. I can trade some New Zealand dollar, and I could take another Aussie and Swiss. But if I take another CAD, I'm overexposing. So trade everything that moves that you want to trade. Just limit your exposure. Limit the number of pairs that you're in. Limit the number of positions that you have. If you could say, I'm not going to have more than 8 positions open. I've got 4 at the moment. I won't take more than 8. That gives me 4 more pairs I can trade. What they are, I don't know, because it depends what sets up. You can't just trade 14 pairs. If the 14 pairs that you pick all go range bound for the entire month, and none of them give you an RSI 80-20, for example, if that's what you were using for the entire month, you can't pay your bills. But something will move, and that you have to jump on. You trade what comes up. And this is why I don't really want to put any kind of exposure system in place. I can manage my exposure myself, and you can manage your exposure yourself, because it's part of being a trader, is looking at what you're trading. You can't have everything automated for you. Everybody wants to have everything automated, but you can't. You've got to be involved in this. Yeah. US dollar's just dropped its interest rates 0.5%. It was only going to do a quarter. It's probably going to weaken the US moving forward. Yeah. Does that mean you should take no more longs on the US? I don't know. I'll answer that question in a month's time. Right now, it's your opinion. So you can either decide to turn the EAs off, or you could set them to go short only, or you could leave them as they are. Yeah. If I program the EA to say don't take any US trades if he's got 2 on and they're both short and in profit, you might want to add another US into it, because your exposure is short, you've got profit on the table, and you want to add some more in by taking exposure on another US pair. EA won't let you do it. See what I mean? You can't limit that element. You've got to be in control of that element yourself. Personal preference. Some people, like you say, in Discord, are trading every pair under the sun with multiple strategies and doing absolutely fine. At some point, they're probably going to fall foul of a couple of big squeezes, but part of the learning cycle. It's how you deal with the squeezes decides whether or not you come out after. Hi from California, Khaled. Any thoughts on NASDAQ? Not yet. It's not open. 2:30 this afternoon, NASDAQ. See where it goes. I don't know. Oh, wrong one. Obviously, we had big bull day yesterday on the US move. So is it going to go for a break of the monthly high? That's your question. See where it goes. Globex is there's no point in analyzing the NASDAQ in Globex. Okay. Globex doesn't do anything. Globex is the Asian session as far as indices are concerned. Yeah, you don't trade Globex. When the market opens, you go with the momentum. Wherever it's going, go there. Where it's going today is either retesting that or it's going to come back down and test that propulsion move from yesterday. Tune in Monday and I'll tell you which. There's no one else on the planet that can tell you either. I wish there was, and they'd tell me. Hedge on this FTSE today. So I've banked 312 on the DAX. So the hedge is 250. So I'm just going to leave the hedge in play today. Target yesterday's low to the downside, upside. Tricky. I'm just going to go ADR, I think, to the upside today. I don't think we're going to get there. It's Friday. We've got no news on anything apart from the pound, obviously, retail, which we've had. So leave it there. One of them will get hit or it won't. Once again, discretion is key. No matter how much you have automated as an edge. No, exactly. You can't, you know, this is, if you ask any trader, I keep mentioning SMB Capital because they're one of the biggest established proprietary trading firms in America. A bit like Billions, Axe Capital. Yeah, I mean that's basically what they are. And you look at their traders, they all have a system or a strategy, but none of them have an automated edge. They all have things that they're looking for in price, and they get a feel for price. And that only comes by watching charts and by doing. They all have a playbook, as everybody. I've got a playbook. My playbook uses RSI and market reversal alerts and ADR. That's my playbook. I have trades that I take, and I've automated the entries of those trades, but the exits of those trades are discretionary because I need to see how they play out. When I get into a trade or when an EA is triggered, for example, on the pound CAD. Whoops. So the pound CAD trade that was triggered here, yeah, the play at the time was that. The play didn't work out. So the second entry was taken and there was news coming. So a decision was made by me to exit in case the news went the wrong way and take some money. I banked $300 and it did. It could have gone down, in which case I'd have closed that position out and been out of the trade. But this is all discretion. There is no way of automating the decision-making process, or there is many ways. I mean, I can automate anything. But what is the right thing to do every time is going to be different. So you could have multiple scenarios for exits programmed into an EA, and it would pick one or all, whichever one comes first, usually. But is it the right thing to do or not? It doesn't know. So this next entry was entered there, and the average was moved to there. So the exit was decided to be here because I'd already profited from it, and my discretion said if I get out there, I'm going to make a little bit more profit. Added to that profit, good old trade, nice, 1 week, lovely. Didn't happen. It's pushed up again. So another entry's gone in here, average has come up to here. So now my take profit is now here. I've moved it to here. I could be putting it there. I could be putting it at 150 ADR. I've decided to put it above those highs there. I don't know where the right place to put it is because I have absolutely no clue where this is going, and neither does anybody else on the planet. This is the discretionary part of trading, and there's nobody that can automate this because it's you doing it. I don't know whether it's right to target here. Should I hold it for 2 weeks and go for that? You can do a poll in YouTube and in Telegram, and half the people will say yes, half the people will say no. If 60% of them say yes, great. Doesn't mean it's going to happen. It means that the opinion of 60% of people is it's going there. The opinion of everybody on Wednesday was that the rates would reduce by 0.25%. their opinion was wrong. Discretionary. Everything in trading, every trader that is successful is discretionary. They have an automated way of doing certain elements and a playbook of strategies. But when that button is pressed, that playbook goes out the window, because what happens afterwards is not ever going to be the same twice. If you get in short and your play is to take a 1R return, if the candle closes 1R down and it moves down 3R because there's a news event, your playbook changes. Your whole approach to this one individual trade becomes different to what it was when you first pressed that button. Your plan was to get out here and then move to break even and hope that we got a bounce and drop. Yeah, it dropped 3R in one go and you went, right, what do I do with this? Up to you. You can ask all your colleagues in the room if you want to, but they're not going to tell you what the best thing to do is, because they don't know either. That part is got to be done by you. And that's why I don't want to limit exposure or anything on my products, because you have to make these decisions. Some people are trading everything. Some people are trading one. Got some people that are trading two currencies only. They literally are trading the pound US dollar and a yen pair. You know, well, not one person is, but do what you want. But it's a decision-making process that you have to make yourself. You've got to be involved in this. As much as we'd all love to have the automated EA and sit on a beach drinking Mai Tais, it's not going to happen. There isn't one. It just, it's just one of those things. You've got to be involved in this and invested in it. If you're not invested in it, you're not going to manage the risk properly, because this is money, real money that you can or can't spend. That $3.5 grand I put over there, when I got the margin call on it yesterday, I was like, that's $2.5 grand. And then I suddenly went, that's $2.5 grand. That's 2,500 real dollars that I just got taken away by my broker. Real money. Yeah, it's only a little account, but it's a big amount of money. Yeah, I got an email from TUI this morning, who I went on holiday with this year, just offered me to go to Turkey, the resort I just went to in November, for $1,000. That's me and my wife, week fully all inclusive in Turkey in November, taken away by my broker. It's discretionary, and it's got a real impact on your decision making process when it's real money and when you're trading. So you've got to have that human input into it, because it is real, isn't it? You've got to be involved in the decision making processes. Pound Swiss, I got an alert. 4 hour. Nice extension. Again, exactly the same trade as that. But am I taking it? No. If you've got the EA full auto on all 28 pairs, you are. Do you want to? If it enters a trade for you and you see it pop up in here, press the button. Get out. No, I don't want to because I'm overexposed. Make that decision yourself. Or, yep, looks better than the other pound pairs I've got on at the moment. I'm having it. And if it goes against you, you've got 3 exposures short. Deal with it. It's your problem. You've got to deal with it. Your portfolio is never going to be the same as my portfolio, and it will never be the same as the guy sitting next to you's portfolio. Your portfolio. Anyway, I've waffled on enough this morning, haven't I? So yeah, this is looking very much like the DAX on Monday at the moment, isn't it? Considering the pound move today, I'm surprised this thing's not managed to get anywhere, but it isn't. I would be expecting this to be dropping today on that pound strength, but obviously if you look at the pound, that strength seems to have vanished very, very quickly. So we'll see where that one goes, but nothing much we can do with the DAX today. If I can click on the right button. The FTSE rather, it's stuck. So out of the DAX, that was target. I got out there a little bit too early. Discretion. So I'll be back on Monday and we'll see where we go next week. The news on Monday is PMI week next week, so it's a busy old week. We've also got the Swiss rate announcement, and they're planning to drop again. Again, it's becoming a very weird situation because their inflation is at 1.1 and it's still dropping. Their interest rates have pretty much gone and it's still dropping. So yeah, so this is the danger of disinflation. Yeah, this is why we're all trying to get our interest rates down when we get to 2%. When you get below 2%, you run the risk of it going like that and your GDP goes through the floor. So admittedly, the Swiss are different because most of their industry is banking. So interest rates are obviously a little bit different. But yeah, it's a busy week next week. PMIs on Monday. So we should see very good volatility Monday. We've got the pound, US dollar and euro. And then we've got the Aussie rates, again, not changing it. We could get a shock there. But again, no change on that expected. We've got Australian CPI. We've got the Swiss rates. We've got unemployment as usual. So yeah, busy week, but it's all front loaded next week. Monday, Tuesday, Wednesday is the volatility next week. So we'll see where we go. But this afternoon, don't forget, we've got the retail for the CAD. So potentially US and CAD movement this afternoon. So watch your CAD exposure. Obviously, I want nice big retail figures for the CAD, please. If not, next week. That's all you're doing, really, if you think about it, isn't it? When you get into a trade and the news goes against you, all you're doing is you're delaying it by a few days to a week. Yeah. Once the news goes your way, job done. Right. Have a good weekend. I will be back Monday. Anything you need, I'll be in Discord or Telegram. And yeah, I will see you guys next time. Have a good weekend.